Today I'm going to go through a activity on partnership ledger accounts. Right, the first question asks you to complete the table for each of the following transactions. Okay, the first one tells you that the partner took a lot of stuff for his own use. Now I remind you that everything that the partner takes during the year automatically gets recorded in his drawings account. So if he takes his salary, you're going to debit his drawings account to increase it, obviously taking money, so you're going to credit the bank account. Then he took a vehicle, that's when you take asset disposal, so you debit his drawings and credit your asset disposal. Do not credit vehicles here. It's asset disposal where you record the selling price of the assets. And then stock taken from the shelves, and they tell you that a profit is made on stock taken by partners. The reason why they usually do that is because it's not fair if one partner keeps taking stock at cost price and the other partner doesn't take any stock. So usually they'll take it at a marked up price, but just at a discounted selling price. So if this is the case, it's like you're making an actual sale. So you're going to increase the partner's drawings, and the contra account here is sales, which is income, and then trading stock needs to decrease, which means you're going to credit your trading stock account to decrease your asset, and the cost of sales is going to increase. Can you see now you've got a selling price minus a cost price, which means you are going to make profit. Then at the end of the year, the partner's annual salary must be brought into account. This is the adjustment entry for salary. So you debit salary as it's an expense to the business, and you credit the partner's current accounts to increase his earnings. And then the closing transfer entry for salary, that's when you transfer to appropriation account. So you're going to credit the salary to close it off. Double entry means you debit the appropriation account. And then the closing transfer entry made when a partner's drawings account is closed off. You need to close drawings off, so you'll need to credit that drawings account, and you're going to debit the current account. That current account entry is on the minus side of current account because that's what the partner has taken. Right, the next question, they give you some information here. They give you an appropriation account and additional information. And then the first question says, being earned a bonus. There's two reasons why it was decided to award him the bonus. So he must have done something extra for the business, for the partnership. So he may have been the manager of the partnership. He may have brought in new customers. It may be his annual bonus and so on. So that is the reason for giving a partner a bonus. And then they ask you to calculate the amount marked A and state what this entry represents. If you look here, A is this entry here, which came from the profit and loss account, and that is your net profit figure. And you're going to use this entry here. Bean earns a bonus of 25%, which is 5% of the net profit amount. So the bonus of 25,000 is 5% of what A is going to be. So to calculate that, you take the bonus and you divide it by 5%, gives you the 500,000, and as I said, it's your net profit. Right, then they ask you to calculate the amount marked B, which is the salary of bag. If you read here, it says they give you Bean's annual salary, then they say the salary for A must be calculated as follows. He received an annual salary increase of 15% on the 1st of January, and after the increase, his monthly salary was 20,700. So that's 20,700 is after you've increased by 15%. In other words, the January and February salary are 115% of the salary before the increase. The first thing you need to do is you need to divide by 115 and times by 100. In other words, you're trying to get the amount before the increase, which comes to 18,000. So that 18,000, he will earn that for the first 10 months of the year, and then for January and February, he will earn the 20,700 which they give you. And then you add those up and it comes to 221,400. Right, the next question asks you to calculate the amount of capital each partner had contributed. So you're going to need to use the information here. They say both parties have contributed an equal amount of capital and not changed at all. The interest rate on capital is 6% per annum. So in other words, you took a number, you times it by 6%, and you got 33,600. So to work backwards here now, you're going to take the 33,600, you're going to divide by 6%. Gives you 560,000 if they want each partner, so half of it is going to be for each partner. Half of 560 gives you 280,000. Then calculate Bean's share of remaining profit or loss, state the double entry which will be made, and then why it's necessary to record this entry. Okay, the figures I've used here, as I said, net profit minus the salary of Bean as well as the salary of Bag, as well as the interest on capital, as well as the bonus. And that gave me a remaining profit here of 40,000, and they tell you over here that remaining profits and losses are shared equally. So in other words, half of that remaining profit will get given to Bean. The double entry to close off appropriation is to debit it, and you credit the current account because that's a share profit, so it increases Bean's earnings. And then the reason for the entry here is, as I've just mentioned, so that you're going to transfer his share of remaining profit to his current account, as this is part of his earnings. Okay, that's the only activity I'm going to do now with you. I'll do a further video at a later stage. Thanks.